Greetings again. This is Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Well, today is April 28th, 2020. There's about 3 topics we'd like to discuss today. Again, our goal and our mission here for our clients, our friends, our family out there that are watching along, and we have tremendous support. We actually tremendous viewership, so we're truly grateful for that. Is communication, to make sense of the world that we're in today, and let's go through the 3 topics that I think are important as it relates to your money, your portfolios. So let's discuss the amount of stimulus that's actually out there in our economy right now, that's either been approved or working its way in the U.S. economy as we're talking about it. So think about the U.S. economy as a patient, and it's in the hospital. Obviously, we have a virus-induced depression in the United States today, as measured by not only the markets pulling back, but more importantly, the unemployment rates, skyrocketing over 20 plus million Americans that are unemployed. Plus, that's a 15-16% unemployment rate, which is something that we haven't seen since the Great Depression. So if we have this stimulus that's actually out there right now, that's been approved by Congress as well as the Federal Reserve, so both monetary and fiscal policy, have worked together over the last 45, 50 days, if you will, to inject $6 trillion of stimulus by way of checks in hand to unemployment benefits, even better than they were in traditional unemployment in traditional times. As well as what the Federal Reserve has done to be a backstop, or basically supporting all liquidity markets and providing liquidity in times of need. If you add all of that up, and I was just scratching the surface of what the amount of programs that are out there, we're well over $6 trillion right now. Put that in context, right here, we're talking about $6 trillion in counting. The U.S. economy, if we take a look at 2019, and we look at the U.S. GDP, gross domestic product, basically the goods and services that are sold all totaled up in the United States, take 2019 total, you're about $19 trillion, okay, for that calendar year of what the United States produced, okay, and what we consumed. If you divide that up and look into what we just supported the market with fiscal and monetary policy at this moment, we're at $6 trillion, and they're talking about another round of stimulus right now. Actually, Congress is, believe it or not. This hasn't even worked its way into the system. Obviously, we need it on the unemployment benefits right now because of the small businesses, but it's staggering the amount. So that's where the market itself, I keep bringing this point up, and I really want to get down to the details of this because this is truly important. So now let's look at the economy as represented by, let's just look at small businesses to the stock market. Why is the market up? Why do we see markets well off their lows? There's a lot of head scratching as to why this is the case. And even the best minds in Wall Street have missed this at this moment in time. And everyone's kind of sort of just sitting on the sidelines and not really understanding it. And oftentimes we don't have the answer, but it's important to look at the numbers themselves, and maybe the numbers share and tell the story. So let's take a look at it. Last year if you look at the United States, we have about 30 million small businesses, and they employ majority of the people in the United States, right? If we look at the U.S. Small businesses versus the publicly listed companies in 2019, meaning the companies that are on the New York Stock Exchange, the NASDAQ, all the exchanges themselves, and they're publicly listed. That means that they have access to capital. They sell parts of their business. They get equity offerings, debt offerings. They literally have liquidity at their fingertips because of the U.S. markets. Only less than 5,000. So we have less than 5,000 publicly listed companies versus the 30 million small business owners like you and me out there. Okay, so the challenge now becomes, and as we've seen this playing out in the headlines, is that the small business owners, over 80% of small businesses right now have less than 2.5 months worth of capital on the balance sheet. So they basically don't have the cash flow to keep them afloat. So now we have a challenge here. We're seeing that only 5,000 of the marketplace, if you will, the stock market has access to that capital at any given time. Therefore, the big get bigger. This is a big story I keep talking about, and it's something that will keep playing out. So those companies, those large companies in the United States, will continue to grow and not only survive, but they'll thrive through this. Okay, and that's what the market is seeing. That's why the market is up. They're looking at those bigger companies getting bigger. Well, the mom and pop shops are having a difficult time to survive and even, get through this right now, because it's a cash flow issue, it's a crunch issue, let alone employees, holding them and retaining your best employees at this moment in time. So that's the story that's playing out right now. That's why the markets are disconnected from the economy. So that's going to play out, right? And in the meantime, we have a stopgap of about $6 trillion. So there's stimulus in hand for those that are unemployed. There's, hopefully the small business aid gets to the small businesses. I think that's the biggest challenge, is that, it was a good intention, but the mechanics, I think I did speak about this in a previous post when I said it's all about execution. We'll see, the idea was right, to get the hands in the small business owners so that they can retain the employees, so they keep the employees and payroll, so that the next 3 or 4 months we get through this. And once we work our way out of this, then the business is still open. The employees are still intact. But the execution risk is now playing out in real time. I discussed this, and I think this is what's playing out. And it's a concern, right? It's a concern. So the markets representing the top 5,000 companies, the largest companies in the United States, are different from what you and I see in a mom and pop shop in our local community. So it breaks our hearts. It really is a difficult time right now. That's why investing is different than what we see. And you have to separate the two, okay? So there's another round of stimulus. I think Washington's talking about that. That's going to be another discussion for future video podcasts, because the balance sheet can't support this much debt, meaning the United States grabbing so much money and increasing the balance sheets in terms of all this stimulus. And the bigger picture too is, we're going to have more testing. So as you know, and I've talked about this before, if you followed me, the denominator is the number of infected cases in the United States, right? So if you increase testing, you're going to increase the denominator. It's going to get larger, just a statistical fact. You also then put in the death rate, and the death rate goes up, but it doesn't go up as quickly as, or as large or commensurate with the denominator. So what does that actually do? You take the numerator into the denominator, and you're going to get a statistically proven less death rate than originally what's thought, because the sample set now grows larger. Okay, this is statistical analysis. I think that's what the market sees through at this moment in time, is that, one death is too many, and, people die of the flu, people die of other things right now. And there's highly infected, this coronavirus is highly infected and infectious. So it's not something to take lightly at all. And I'm not a doctor, and we're not pretending to be here, but we're talking about the true facts, statistically speaking. So we will see more tests. We will see more people testing positive, okay? And they didn't need the hospital. So that's going to add to the denominator. The numerator is going to be what it is once it finally, once we get there over the next, few months and maybe even years from now. But that statistic number of basically the death rate is going to come down. It's not going to go up. So we've covered a lot today. The numbers really tell the story. I think, for all the first responders and medical professionals, thoughts and prayers, and for anybody who's been affected by this tragic, coronavirus, our thoughts and prayers are with you as well. I think we are doing our part as Americans. We are making some progress here. Let's just keep, making forward progress, but let's get, support local small businesses. I think that's the key here as we get the green light in the weeks and months to come, that, once you get out and go out of your homes, go to that small business, that small restaurant, that small mom and pop shop. They really need our help and support. So thanks for listening today.